Okay, now let's move to the next aspect. Now we have already seen technical analysis and we have seen how to draw the support line and the resistance line. It's very simple. At this juncture now, we want to now bring in the strategy. Now the strategy for your training, it's a very simple one. And it's one that I use. And it's one that has helped me to make money a lot of the times. Now in Forex market, of course, you know that losses is part of the game. But if you are consistent and your strategy is consistent and you are not a Forex, let me use the word Forex prostitute. In other words, you change strategy today, you change strategy tomorrow, and you keep changing and changing in search for a wholly perfect strategy, you end up not finding anyone. And as a matter of fact, you can't find a perfect strategy. Now, the best you can find is a strategy that can give you up to a level of percentage, 80%, 70%, even 90%. And this strategy I'm about to show you can give you a minimum of 75% Forex profit. And if you can be steady with it, I can guarantee you that you will make money in the Forex market. Now, what is the strategy? It's simple. Manually, you can have it here on your trading chart. You go and click this button here. You can see it here. That is this navigator. This navigator, click the navigator. You will see trend. Click the trend. This trend there, click the plus. Now you will see moving average. Just take it in 3 times. The first one, you make it 8, and then ROIC beef, they give it red, you click exponential 2 shifts, and then you click, or you can make it just 1 shift, yes, just 1, and then you click. Now you take in another one. Now you make this one 20, and then ROIC beef. Now you can make it orange. You can see it. And then the next one, ROIC beef. The next one will now be blue. You can make it blue. So you can see it here. And then this will be 50. That's it. Now this is all you need. Now make the lines faint by reducing the thickness of it, just like this. Remember, we have first of all taken care of our resistance and support levels. Now the 50 EMA, leave it this same way it is. Leave it here like that. Now, because it will help you know the overall trend. Now, if you want to take your trade, you go to the daily time frame. Now, the rule is that your 8, your 20, and your 50 must be in this direction. You can see like this. Okay, I'm coming, please. Let me use my, okay. For example, it must be like this: 1, 2, 3. You see it? It must be in this shape. Very, very important. So let me draw it again. 8 is like this, and you see your 20 this way, and your 50 below this way. All of them in the upward direction. Very important. All of them in the upward direction. So you can see the 8, you can see the 20, you can see the 50 in the bullish direction. That tells you that you cannot sell, you should only buy. Now, when is the best time to enter? When is the best time to enter? Take note of these points where 8, line red 8 crosses orange 20. You can see the line red 8 here crosses the orange 20. As you can see here, this is the 8 line, 20 line, crossing each other. So when it crosses 20 to the up direction, what do you do there? You buy, as long as the two of them is on top of the 50 EMA. Now, when is the right time to enter? At the point where you see here, sorry, now you see this place is where they crossed each other. In most cases, where it crossed each other, this is the bar here. I always advise that you wait for a retracement. It will go up at that point, retrace back, then this is point 2. This is the best place to enter. Allow a bearish candle to take place. That's if you're a conservative trader. You don't want to waste time. I mean, you are not in a rush. Once you see, okay, the signal has come, they both crossed each other, then you have this candle. If it's possible, some will enter at this point and buy, and stop loss will be here. But that will make your stop loss too large. You can also hold on for the candle to form a bearish candle, the red, coming down towards where the signal actually came up, that the crossing, and there, once a bullish candle comes up again, then you enter. Now, how do you take profit? It's very simple. I've told you. Once you have drawn this line to the best of your knowledge, at this point you have entered, this will be your take profit 1. The next resistance or support line or price level will be your next profit 2. The next one will be your next profit 3. Or you can decide, if you are trading the daily level, the daily time frame, you can decide by saying, okay, if you watch, you can, for example, you entered here, and if you entered here at this point, and your stop loss is below the previous candle, which is 26 pips, sorry, 264 pips, what do you need to do? You double it. That will give you about 520, which will be your take profit 1. So 260 is your take profit 1, 520 is your take profit 2, on and on like that. That's another strategy. So double your risk is what you take as your take profit 2, single your risk, same level of take profit reward to your risk, take profit 1, double take profit 2, triple take profit 3, and you can really get that every time you trade on the daily time frame. So that is that. Now you can also, from the 4 hours time frame, you look for when those crosses takes place. But the thing there is that you do not go against the trend. You don't go against the trend. Now watch out for areas that are choppy like this. Choppy areas like this, you do not want to trade in those choppy areas, just like this. You do not want to trade in these choppy areas like this. You do not want to trade in these choppy areas. What do I mean by choppy areas? Choppy areas where the you see erratic changes, movements that will not help, make decisions. For example, you see it crossed here, suddenly it crossed back, it crossed again, it crossed here again, and you can see this kind of many touches on the 50 EMA. Now once you are about to trade and you see a first touch, a second touch, a third touch, I do not think it's a better time to trade. What you simply do is just create a rectangular line, a rectangular box on it, and then you leave the trade for that day. You stay away from it, and then you wait for when you have a smooth curve like this. But these kind of rough curves are called choppy moments on the trading chart. You let go and do not take trades. Once you observe this happens the first time, it crosses again the second time, it crosses the third time, you let go. You forget about it until you have a perfect move like this. Now when it moves like this, after this accumulation phase like this, you wait for it to break out. Now wait for the retest, wait for a retracement. Once you get a retracement to this second zone, the 20 EMA, then you can come and take your entry at this point, and then you plan for your take profit here. Or you want to check at this point, maybe you entered around here, then stop loss at the bottom 72, so your take profit one will be 72 around here, then take profit two will be 140 around here, and then the third one will also be around here. So that's all you need to do when you are trading. Now on the other hand also, you just need to ensure that you take a look at your moving averages. Your moving averages have their sorry for that distraction please. Your moving average have a clear point where you can notice when the trend is becoming weak. For example, you can see here at this point, the trend was a sharp one to this point, and then you see a retracement like this, and then you see it move again to this point, and then you see a retracement again. You can see it. Now this is part of what we are talking about in the market. It moves with an impulse, it retraces, and then it moves with an impulse again and retraces again. And at those points of the retracement, you know that you have to take your profit. For example, you are trading and then you see that it has crossed the 8 EMA and moved to the 20 EMA, you can close your trade. For example, at this point, it moves to the 20 EMA, crossing the 8 EMA, you can close your trade. So there are many ways of taking your profit. There are many ways of entry. You can be a very, like I said, not a conservative trader where you want to wait for a retracement like this one here, instead of entering around this point where across each other, you want to wait for a retracement like this before you can now take it up. You can see that, and then once you see this retracement, you take your profit here. Then you wait for this retracement, you enter again at this point, and then you wait for this point, and then you enter to this point. Now when it retraces again to this point, you take your profit again at this point. So it's very simple. The moving average is a fantastic style of trading, and I must tell you, I have been using it for many years. Very simple, and my students know that this goes a long way to guarantee them a profitable trade in the forex market. Now the rule is very simple. Your 50 EMA in this case is your trend marker, so you follow your 50 EMA. You don't sell when your price action is on top of your 50 EMA. No, you don't sell, you only buy. Now there are cases where you can sell. For example, let's look for an example here. Now this is a clear example, you can see it here. Now it crossed at this point. Now this was where it crossed, you can see it. Now you cannot sell at that point. You wait, it broke out at this point, and you can see when it broke out, this was where it came to. You can see it here. This was where it came to. Now you see it kept retesting this place, and then at this point it broke the line here. Now usually a conservative trader will wait. After it came down, there will surely be a retracement back. Now it retraced here, and you see these two soldier candles, that is this green and this, and then you had an engulfing bearish candle here. From here, you can now take the trade to this point here. You can see it where it now retraced, and then you take your profit at this point. Very simple. Now you allow it come down again. You allow it come down again. You can now take another trade here. It comes down, retraces to this point, and then you take your profit. and so on. So that's that about it. Now let me say this: you can also there's also times where you have losses, but these losses are minimal compared to the profits that you are going to make using the moving average. Now for moving average, a lot of persons says, we've known the moving average, but I tell you a fact. I can tell you a fact based on experience. The simple strategies make you the money, not the complex strategies. Now the only disadvantage of this is that you have to be sitting on the system from time to time. You have to always be on the system to be able to know when to enter, because there is no alert here. It doesn't talk to you, it doesn't let you know, and it means you'll be spending more of your time watching the system all the time so that you can be able to take trades. And of course, you know what that means. You will not be able to do any other thing except you're a full-time trader, which I do not advise. If you have something doing, you can also trade as well. And so that's the disadvantage with just using the moving average, but that is the strategy. But if you can find time to, for example, on the 4-hourly time frame, you put your wristwatch or your alarm on a 4 hours alarming rate or level, such that every 4 hours the alarm rings, you open your chart and you check for the candle so that you don't miss. So I used to do that those days. Yes, I used to do that. I put my alarm on 4 hours. Every 4 hours I put on my laptop to check. So I keep each candle on the 4-hourly time frame is a 4 hours. On the 4-hourly time frame, each candle is 4 interval. On the daily time frame, each candle is a daily interval. So around 11 o'clock, 11:30 in the night, you can see a new candle beginning to get formed. So on the 4 hours too, the same thing. That way you will not miss, because you only need to check your system 4 times a day. So you see that, and then you take your trade and you make your profit. Now that's it about this strategy. It's a very simple one. Finally, let me just show you how you go about it. Take for instance on this now, it retraced, it retraced to this level, and then you can see here that it has crossed each other. Now the 3 of them, the 8, the 20, the 50, clearly in this direction. You can see it very smooth, very smooth, very smooth, very clear. Once you have it like that, you can see it here 1, you can see the 20, you can see the 50. Now once you have it in this fashion, it is very solid to go in, and you can see it clearly at this point. So assuming you buy around here, then you allow the trade to go. Now the trade keeps going, keeps going, keeps going. Now at this point you see it retrace at this point 3, that is from here to here. Now at this point you can take, once it hits crosses the 20 EMA, you can take your profit, or if you decide once it comes to the 50 EMA, you can take your profit. It's all left for you to decide. At this point also, you can now decide to take another trade. But remember, you have to either take your take profit at the nearest price level, number 1, or you decide to check your risk reward. For example, if you enter the market around here, now your stop loss will be at the bottom here, which is 93. Take profit 1 will also be 93, around here, 93, and then take profit 2 will be around 186, which is around here, 186, and then take profit 3 will also be around 260 something. So that's how you go about it. Or you can decide to say, no, what I just want is when it retraces, when it goes up and retraces back to the 20 EMA, that's when it closes below the 20 EMA, I'll take my profit. Or when it touches towards the 50 EMA, I take my profit. Whichever one you decide to do, it's still going to be a profitable trade. So that's that about the strategy. It's very simple. All you need to do is be coordinated about your trading and follow it. You don't need to run around looking for many other strategy. This is a very simple strategy that you can go with. Honestly, a very simple strategy that you can go with. Just stay with the 8 EMA, the 20 EMA, and the 50 EMA. You will still be profitable at all times. Now, you can also learn to combine your support level and your resistance level. Take for instance, you can see this here. It went up from here and then it came down to retest this price level. You can take your trade by simply waiting for it to cross the 50 EMA at this point, and then you take your trade and calculate your take profit by calculating where you entered at this point here. Maybe you entered at this point here, and then your stop loss is at this point here. Good. Adjust here to here, and then your take profit 1 will also be around here, and take profit 2 can also be around here, so on and so forth. So it's as simple as that. But like I said, the major disadvantage here is that there is no alert. It doesn't tell you when it has happened. It is you that will be putting up your time for 4 hours, and if you can keep up with it, no problem. Otherwise, we'll be moving to the next stage where you have an indicator which I have designed. This indicator, you can install it, and when you install it, it will tell you when the signal has taken place. Not only that, it will show you when you can take your trade by bringing up an arrow. Now, that arrow, when you take it, it will also tell you where your highest level of probable profit can take place. So you can design your take profit 1, take profit 2, take profit 3 between when you enter the signal and that point where it advises you to take your profit. It's a very simple indicator which I've designed, and the HenroidFX 3 moving average indicator trend symphony, it's a fantastic one. And like you all know, you put it on in your office, go do whatever you are doing, it will alert you, let you know, and bring you to the table to take your trade. So I'll see you in the next video where we shall be talking about this wonderful indicator and the advantage it brings to the table. If you love this video, please do well to click the follow button and to like this video, and please share. And if you have not subscribed to this YouTube channel, please do. When you subscribe, you'll be the first to get the notice when a new video is available for view. Thank you, and enjoy your day. Bye.